Hey guys, welcome back. Patrick here. In this video, let's go over some of the earnings that we've had for SPACs today and yesterday. This is very significant, of course, because earnings are what allows you to track the progress that these different companies have made over the past quarter, and kind of gives you, especially the guidance for the next quarters, is what really matters. So I picked out 5 companies that either I have in my portfolio or I want us to keep tracking. We have SoFi, Tattooed Chef, of course, some of my bigger positions, Playstudios, Proterra, and then LAZR, Luminar. I don't know if you guys even remember about this company, but they are doing pretty well. So let's start with SoFi, and wow, that is really, ouch. That hurts. So after hours right now, it is down $2, almost 12% at some point when I was looking earlier. This is very difficult to understand, and it is very unfortunate because this one had recovered nicely in the past week, right? So I personally thought that this was kind of organic growth, people buying into the company to hold it, but it seems like a lot of it was just people betting on the earnings. Now, to me, this is very strange with this company because I expected that the company would see some decline until October, where their warrants are going to become exercisable, but to drop $2 already after hours, I'm a little bit surprised because the numbers aren't that bad. So just to give you guys a quick disclosure, I do have a $15 cash secured put that expires 2 months from now. So personally, I have a lot of time, but you know, seeing it very close to the $15 is not good. Tomorrow's probably going to be a fairly bad day. All right, so let's look at some of the numbers. Everything I've looked at seems pretty good. The members are up, not just year over year, which is very important, but also even more meaningfully quarter over quarter. Right, so it's pretty obvious that from one year to the next, especially 2020, like the companies are going to look better than they did a year ago. But when you can actually grow from one quarter to the next quarter, that is where you can see the real growth. Right, so their members have gone up by what, 250,000 in the past quarter, so that is very good, an upgrade of 12%, and then year over year 112%. So the products is the total number of products that each customer actually uses. So, you know, personally, I have the money account, the invest account, I have an IRA with SoFi, so personally I count for 3, right? So on average, you can see that each customer has about 1.5 products with SoFi. So this is a small increase from last year. Their lending is up 3%, 3.8% rather, from last quarter. And then financial services, they're up 19%. Right, so I don't see any big decline here that would make me see red flags with SoFi with these earnings. Now, if you drill into the actual like revenues themselves, you know, it's great to see more members, but how does that translate into actual revenues? So you can see this non-GAAP financial measures, net revenue 2021 second quarter 231 million compared to 195 million in the first quarter of this year. So that's a pretty nice increase, right? And then if you compare with last year, the second quarter, that was at 115 million. So they pretty much doubled since last year. To me, that is excellent. I don't know exactly what else we can ask for this company. All right, so here you can see the breakdown of the different categories in the company, right? You have the lending, technology platform, financial services, and corporate. Here, most of them, if not all of them, yeah, so the lending is up from the previous quarter slightly. The technology platform is down slightly from the previous quarter. This is Galileo, right? So that is the negative aspect, but I don't think that would make the share price drop by $2. And then you have the financial services. They're a little more... they got a little bit more revenues than they did the previous quarter, and then corporate is a little bit better than last quarter. All right, so this, when you look at it this way, I don't exactly see what would make the share price crash. The only thing that is a big deal compared to last year is when you actually do the earnings per share, the EPS is pretty bad. The company is losing a lot of money per share. It is about 48 cents per share right now. But here's a big difference if you notice. This is the adjustment for the warrants. If you guys remember, the SEC changed the rules for how the warrants are counted. Well, look at how last year, second quarter, There were negative 861,000, and now they were at 90 million in the first quarter of this year, and now they're at 71 million, those adjustments. So that is a big deal, right? This makes their numbers look way worse than they were the year before, and it makes the company look like they're losing a ton of money. So, you know, overall, I don't see anything super negative about SoFi. I hope it recovers tomorrow, and this 10-11%, you know, people will actually look at the numbers and realize it's not that bad. Personally, SoFi, I'm going to continue holding it. I'm not exactly sure what's going to happen with my cash secured put, but again, this one, I'm just going to be holding it. I don't see any big red flags. The company is just doing what it needs to do to progress, right? The numbers are better. They're getting more members, and we just have to wait and see what happens over the next few years, right? This is a long-term play for me, and probably should be for you too. Alright guys, before I move on to the next company, I do have to mention that the CEO reiterated the guidance for the full year for SoFi, so no big concern there. There's not been a revision down since last quarter, so again, I'm seeing this as a whole lot of nothing, right? There's no big reason why the stock price should be going down, so not a lot of concern with this one in my book. Now, Tattooed Chef is a little bit different. Look at how it's crashing after hours. Another down 8%. This one is a little bit more of a mixed bag. I had very, very high expectations for these earnings, and it's not that good, right? It's not catastrophic. We're not throwing the towel or anything, but we were hoping for a little bit better based on all the positive news that we've had in the past few months. All right, so this is another stock that had been recovering nicely over the past couple of weeks. And just a couple of days ago, it went back up above almost $22, and now after hours, it's crashing to $18.75, and maybe tomorrow is going to be pretty painful once again. So what have we seen with this one? Well, the revenue 50.7 million, a 45.9 increase compared to last year. So this is what I was talking about with SoFi. When you compare companies year over year, usually the comparisons are going to be very good. I mean, this is a very nice increase of almost 46%. But it's when you compare them with expectations and also with sequential quarters is when you get a little bit of a different story, right? Not, again, no major concern, but they need to do better next quarter. All right, so here's what I mean by that. If you look, revenue last quarter was 52.7 million, right? So now we have a drop of about 2 million from one quarter to the next, even though the company has much better distribution and is adding more and more and more stores, right? So I haven't had time to listen to the conference call yet, right? Maybe you guys will have by the time you watch this video. So I'm going to keep investigating into that in the next few days, next few weeks. But we need to have some answers here. There is some seasonality when it comes to food products, especially frozen food. Obviously, in the summer, people are going to buy less than, you know, during the middle of the winter, but we'll have to see how they're doing in the next few quarters. All right, gross profit, 8 million, that's not a big deal. We're not really looking for this company to generate profits right now. It's more about how much revenues they're going to have. And also that 50.7 million, one of the reasons why it's a little bit disappointing is that the analysts were expecting 54 million. All right, so it's a miss on the revenues. And there's even some YouTubers, I'm not going to mention who, that were like, oh yeah, I think they can really crush these estimates. Maybe they'll get 70 million in revenues. Well, you know, that's pretty far off, right? So that's why it caused some disappointment with a lot of the investors. So net loss 53 million. This can look very concerning, but 46 million of that was a one-time accounting thing, right? So in reality, they lost about $7 million, and that's not a big deal for a company like this that is growing. We're not looking for them to like generate profits quite yet. We just want them to have a sustained growth. And again, I go back to the revenue down from last quarter. You know, we want them to grow every quarter. That would be the best that we can find. So the company still has 140 million on their balance sheet, so that is excellent. And then their guidance has not really changed from the first quarter, so that is positive, right? They're following their plan, so they expect 235 million to 242 million. Nothing really problematic there. The company is doing well, and they are starting to see a little bit of revenue from the tortilla company that they had bought a few months ago, if you guys remember. One of the two factories is already in production, and then the other factory, Karsten, right, they're equipping it right now, so that should be in the fourth quarter, and then it should start generating a lot more revenues in the first quarter of next year. So that's what we have to look for with this company. The one big positive that I saw, right, that I didn't mention enough possibly, is the gross margin has improved. They are talking about how they're getting now some economies of scale, and this is going to be very, very important for like the future for this company. Went from 10.8% gross margin to 15.7% gross margin. So that means that the company is becoming more efficient, right? That is a very, very strong point. So that's why I was telling you guys, it's kind of like a mixed bag, right? There are some things that are very positive, some things that are a little bit more negative. Now, last anecdotal thing is I continue tracking this stock and the inventory in Sam's Club, at the one closest to me, and they say that their production is up to par and they can fulfill all of their orders. I still have very, very strong doubts about it. Now, some companies like these, they're going to have limited supply, not limited supply, limited time only offers, right? So some products they're only going to have during the summer, some during the winter. But these are two new products that they have at my Sam's Club, right? So this one, I can't read it from here, it's too small, but it's like one of the breakfast bowls that has eggs in it, and it has, I think, their brand of bacon or something like that. And then one of the bags of rice that they had before, it didn't fully sell. They discounted it, and now they replaced it with another type. This is the pad thai. I actually tried it with my wife. She liked it. It's okay. All right, so currently at my Sam's Club, they didn't have the cheese pizzas, and they haven't had the mac and cheese for months now. So I don't know if those products are not as popular or if they just can't fulfill the orders. We'll have to see what the company says about it, but personally, I feel like the company still cannot generate all the products that they would want, right? So it's not normal for this company not to have their cheese pizzas at Sam's Club. All right, so mixed bag for this one. I'm just going to continue holding it. I hope it doesn't crash tomorrow to 18 or go back to 15, but this is another company that we're just holding for long term, giving them the benefit of the doubt until you get more news from them and updates by next quarter. Next company, we've got Playstudios, ticker symbol MYPS. This one is really struggling, absolutely no doubt about it. I talked about this company in the video called Best SPAC under $10. At the time, it was around $7, but I did not expect that it would go down to $4.50. So in the title, I wrote, I hope it goes down to $6. It's been in a downtrend since the company merged with the SPAC. So I did expect that we could see the share price continuing to go down, and I was just going to dollar cost average down as the shares went down, right? And I feel like this company has great risk versus reward. The more it goes down, the better risk versus reward profile for this company. But with that said, I have to be totally honest, I never expected that it was going to go this low, right? The company's valuation has been slashed in half, even though their revenues have gone down by 10%. Right, so we'll go over that in a minute, but my plan with this company is just to hold. I bought more on the way down, so I lowered my average. Now I just have to basically sit on my hands and wait a few quarters for the company to actually release more games. And one of their big growth plan, I guess, is merger and acquisitions, because they do have money to spend, right? So they want to buy other games and other studios, and that is going to artificially increase their revenues and also their player base. So one of the big factors that scared people off about this company and all of the video game companies in general are the comparisons between 2021 and 2020. There was a big assumption that video game companies were going to go down in their player base because people are going to be out more. They're going to go out and work rather than be home because of the pandemic. So this has been proven to be true with other companies I have analyzed in this space. And now we are seeing the same thing with Playstudios. Their revenues have gone from 77.9 million last year for the quarter to 70.8 million. Well, when you see a decline of 10% like this, that's not exactly what investors want to see. To me, it's not worth a 50% decline, right? But people are not very enthusiastic about it right now, and rightfully so. So net loss of 7 million compared to a net profit, I guess, of 13 million last year. Again, this is mostly due to the increased expenses from the merger. You know, we've seen this with all of the companies. They have to do a lot more accounting and reporting, and that costs a lot. But also, since their revenues are lower, well, you have that deadly combination that makes the company not profitable right now. So when you look at the actual progress of the company, right, so this is where they're talking about their M&A strategy. They have up to 380 million to buy other games, other studios. So long term, I'm not concerned, right? It's just short term, it kind of stings, right, when your stock keeps going down every day. So they're talking about My Vegas Bingo. This is a big deal. Their competitor, another company, I don't want to talk about it today, but as really made some pretty good progress with their bingo program, and this company, Playstudios, says that they are increasing their number of players and monetization with this game. Right, so this is one of the 2 games that we're going to be looking for, their progress with the bingo. Can they actually generate more revenues and profits with it? And then the next one would be Kingdom Boss, and then whatever hasn't been announced quite yet, right? And the mergers that they're going to do. So those are the 2 big avenues of growth in the next few quarters. Nothing has changed when it comes to that. They still say that they're going to launch Kingdom Boss later this year, so I would assume in the fall. And then if you look at the actual numbers, this is where it gets a little bit interesting. Right, so net revenue is down from last year. And then this is where I was talking to you guys about, look at how this marketing, the cost to acquire players has gone up. So 14 million last year to 24, and then administration 3.8 million to 12.3 million. All right, so they're spending more, they're earning a little bit less, and that creates a deficit right now. So the last thing I want to show you is, if I can find it, right down here, they're talking about their actual users, and this is where it stings. This is what people are going to use to really like bash the company, is look at the daily average user has gone from 1.5 to 1.25, and so a change of 19% since last year. So their revenues have not declined by 20%, but overall it doesn't look good when there's less players, right? So the daily paying users, that hasn't changed that much, and this is the good news. Went from 36 to 34, meaning out of all of their users, there is still a very good proportion of them that pays to play the game, and this conversion rate has actually gone from 2.3 to 2.7. So that's where we are with the company. This is another one of those where it's just a wait and see approach. I hope that the share price recovers, right? Ideally, I wouldn't want to hold this necessarily for the next 5 years, but if I have to, I will. I mean, it's a company that we haven't really seen the catalysts quite yet, which are the new games. So it would have been totally stupid, in my opinion. Sorry if someone did that, but to buy this at $9 or $10 and then to be dumping it for $4.50, like whoever's doing that, like how can you be profitable in the stock market? Let's move on to the next one. Next up, let's talk about Proterra. This is a company that I don't have a position in right now, but as the price is starting to fall, it is becoming more and more interesting. So I've had a lot of questions from people about this stock. No one can really understand why it fell so sharply from $17 all the way to $11, and now it's been kind of hovering in that range between like $10.50, and here we had that peak at $12.50-ish. Right, over the past month. So no one can really explain why that's going on. All we know is that the share price has completely tanked. And even though the company is doing fine, in my opinion, from what I can see, you know, I looked through the earnings, they're pretty much sticking to their schedule. So there's nothing really to be concerned about, nothing to be overly excited about either, right? They're just sticking to it, and it's more of a long-term approach. So if you look at it, record revenue of 59 million. What was very interesting about it is that they expanded their partnership with LG to secure their battery supply through 2028. That's a big deal because remember, I mentioned before that through these earnings, we needed to see how the companies are dealing with the supply shortages. A lot of them have been complaining about not being able to have the materials that they need to do the deliveries, right? Well, these guys have decided to like really partner with LG and make sure that they're going to have the battery cells up until 2028, so they should be good to go when it comes to that. Now, When you look at the number of deliveries in the quarter, that's 54 to 15 different customers. That's not super impressive, right? And that's the big problem that we have with the EV startups, is that that's not even one per day. They're not really big manufacturers or anything. And so the revenues are getting better, but in terms of units, I mean, it's really not a lot, right? And then they delivered battery systems for 30 vehicles, and they installed some charging solutions for 16 customers. So this is what I'm finding with Proterra. If you look at the actual numbers, you see that the revenues are up, and then maybe what scared off people is this giant loss that we have right here of 189 million. But again, this is due to accounting. This is because of the warrant liabilities of $129 million. So their real operating loss for the quarter is more in line with 30 million, which is high, right? We know the company is losing money, but it's pretty much what we knew from their investor presentation before the merger. So nothing has really changed. They are sticking to their schedule. I'm not seeing any red flags, aside from the fact that it is a startup that is fairly young in its development, and they're going to be burning through cash as they ramp up in the next few quarters. But they seem to be doing everything they need to be doing. And the closer it gets to $10, in my opinion, the more it is getting interesting as an investment, right? It dropped another 8% today. So I know a lot of people that are into this one, they've been struggling, but you can't really do much about it. The market has been making all of these SPACs go down. I mean, I showed you 4 already. They're all going down still. So last company for today, I want us to take a quick look at Luminar, LAZR. This one actually just released their earnings, and I still have this company on my radar. It might have fallen off of your radar. I wouldn't blame you. We haven't talked about it in several months. But this is a company that, even though right now their revenues are very low, they show so much promise. So currently their market cap is about 6 billion, even though they have 580 million in cash. Right, so about 10% of their valuation is the cash that they have. So they have plenty of money. They're not going bankrupt anytime soon, but now they have to start delivering, right, to justify that $6 billion valuation. So what is the progress of this company in the past quarter? Well, their revenues are still going to be very low, but for the year, they increased their guidance to 30 to 33 million from 25 to 30 million that they had that guidance before. And more importantly, what I liked about the presentation is that they're increasing their projections from 3 to 6 when it comes to the major commercial wins. So those are automotive partners that are going to be using their technology, the LiDAR technology, and putting it on their next generation of vehicles. So they're so confident, they're so close in their negotiations that they're actually raising the guidance from 3 to 6. So that's not going to generate revenues this year, but we're talking about a company that, if all of this comes to fruition, is going to be very, very profitable in the next few years as these company starts to add LiDAR onto their platform. All right, the last thing I want to show you with this one is look at their increase in the order book. Again, the guidance is very, very positive. They think their order book is going to grow 60% when last quarter they were predicting 40%. Well, that is the type of really, really good news from the company when they announce their earnings. You don't want companies that are actually slowing down their growth, or like Playstudios actually lost 10% revenues per year. When you have a company like this, even though they're not profitable right now, they're increasing their guidance every quarter, right? That is the type of thing that over time is going to move the share price. Not necessarily short term, right? It has been a long downtrend. No doubt about that. It's another stock that, people have been losing money on and bag holding, sadly. But I want us to keep this one on the radar, since we're paying attention to it more closely than the analysts on Wall Street. When the company turns the corner and starts delivering and generating more revenues, we're going to know before they do. So that's going to be a great opportunity to get back into this company. I still love the CEO. I think that the company is doing great in terms of developing their partnerships with the automakers. This one's going to be a winner long term, so let's keep paying attention to it. So guys, I hope you enjoyed this review. Let me know in the comments if you enjoy me covering a lot of these stocks right now like this. I mean, it's more of an informal type video, but it allows me to cover more stocks. when I talk about just one stock, I have to like really edit the video and make sure that it flows properly and everything is fine. I don't stutter, you know, I have a lot of quirks. But when it's a little bit more informal like this, I can cover a lot more ground. So it's up to you guys. If you enjoy it, let me know. If you hate it, let me know. And I'll see you guys in the next video.